Hello friends, we'll be discussing an illustration which will be referred to the concept of issue of shares for consideration other than cash. Now the concept issue of shares for consideration other than cash refers to whereby the company who is issuing shares doesn't receive any kind of cash consideration, but yes, it receives something other than cash, which is kind consideration. Now, what can this kind consideration be? Basically, if you're trying to deal in terms of assets, like if you're procuring certain assets or if you're procuring certain services, and in return of that, instead of paying certain cash to that service provider or that product provider, you are providing shares to them of your own company. Yes, this is the concept of issue of shares other than cash. So there is only slight difference that we have to take care of, or rather slight changes in the entry. Rest everything remains the same. You'll get to know this when we try and solve this illustration. So let's jot down this illustration for you, and then we'll figure out how exactly it works out, how exactly things go here and there, and how exactly you're supposed to pass the journal entries in them. So let's start with the illustration, and then we'll figure out how exactly you're supposed to find out. Now, this question refers to X Limited company who is authorized with a capital of 90,000 equity shares of rupees 10 each. This has been mentioned in the question. That means the maximum capital they can give out at any point of time is 90,000 multiplied by 10, that is 9 lakh rupees. That is the authorized capital of this specific company. Now, the question refers to how much are they issuing here. Let's figure it out. Now, the company purchased certain land and machinery worth rupees 4 lakh from Y Company Limited, which were payable in fully paid up shares of X Limited Company. So, that means the company has to issue shares somewhere around 40,000, because per share value is around 10 rupees. That means 4 lakh rupees shares has to be given out, which will be equivalent to 40,000 issue being done to Y Limited Company. Now, let's figure out few more details that are supposed to be mentioned in this question. Now, apart from the purchase that has been done, whatever balance shares were left, that means out of 90,000, if 40,000 shares are being completely issued to Y specific company, balance shares that are left, that is 50,000 shares, were issued to public, which were fully subscribed and paid for. That means 10 rupees issued, 10 rupees received. Completely clear transaction. You're supposed to pay out, or rather give out, the journal entries here, and you have to prepare a balance sheet. That's the requirement of this question. Now, this is a very different question here. As you're passing the journal entries, that means you have to pass the journal entries for procuring the asset also. Now, let's figure out how the journal entries are supposed to be in this question. Let's start with the journal entries first. Now, the first entry will be procurement of asset. That means you're purchasing some asset and there is a creditor with you. That means Y Limited Company. So, whenever an asset is being purchased, you mention that asset account is debited to the creditor account or to the seller account. So, here the entry will be land and building or land and machinery account debit to Y Limited Company. Let's mention that entry with the amount of 4 lakh rupees. Now, the first entry that we have passed here is land and machinery account debit to Y Company Limited, which is for an amount of 4 lakh rupees that has been mentioned here. The next entry will be when we are going ahead and passing the entries for specifically issuing shares to Y Company Limited. That means we are issuing certain shares to him. So let's pass an entry for that, where the amount itself will be for rupees 4 lakhs. Let's mention that entry now. So the entry that we have passed here is Y Company Limited account debit to equity share capital, which is for rupees 4 lakh as mentioned in this question. Now, the next entry will be, as per the question they have mentioned, that the balance shares were issued to regular public and they were fully subscribed and paid for. That means whatever amount we asked for, we have received it. That is what we'll be mentioning, and everything will go under the category of share capital here. That means 5 lakh rupees will go under the category of share capital. So let's mention that. So here equity share application and allotment both we are taking together. Hence the entry will be bank account debit to equity share allotment and application, or equity share application and allotment. Amount will be 5 lakh rupees. So this is the receipt of application and allotment. Now this same entry has to be transferred to the equity share capital. So basically you can ideally pass an entry that bank to equity share capital, or you can either combine that entry together like bank to share capital, or you can mention it in a separate way, the way we are mentioning it right now. That means how we used to mention the entry for application, that is bank to equity share application, and then equity share application to equity share capital. The same way you can do it here. Now we'll be mentioning the transfer of application and allotment money to capital. That will be the end of journal entries here. So let's mark that entry now. Now that we have cleared the journal entries, the next step is to prepare the balance sheet. That is the last part of this illustration, or rather that is the last requirement of this illustration. But before we could go ahead with the illustration part, let us figure out what exactly we need to prepare in this illustration, or rather what exactly we need to do in this illustration. So when we are talking about preparing a balance sheet is a huge task. So before that, we need to prepare notes to account. That is the working on balance sheet. So let's start with the working on balance sheet first. Now, when we're talking about working on balance sheet, we are ideally talking about the items that will be a part of balance sheet. There will be certain additions, certain subtractions, certain workings that we have to do. So let's phase that out now. So the first notes to account that we'll be discussing here is share capital part. That means authorized, then issued, subscribed, then called up, paid up, similar to that. So we'll mention that first. So I'm just preparing the format right now so that you can understand what exactly we are trying to do. The first part that will be taken into consideration is the equity share capital. The first category will be authorized capital. So the first category is authorized capital, 90,000 equity shares multiplied by 10, that is 9 lakh rupees. I've marked a red line under it. The reason being because this total is not supposed to be incorporated into the balance sheet. This is for your reference, your understanding. Whatever comes after this will be a part of your balance sheet now. So issued capital here will be 90,000 shares issued completely, because 40,000 we have given for the allotment, or rather when asset was purchased, and the rest 50,000 is for the public subscription. So issued capital, subscribed capital, and called up and paid up capital is somewhere around 9 lakh rupees. So the total of share capital that we have, or the capital balance that we have, is related to only 9 lakh rupees. Now, the next part of the balance sheet will be a total of cash, or rather tangible assets that we have. We have purchased land and machinery, that is a tangible asset. So that's the next category that we'll be dealing with. So in the tangible asset, we have only one asset, that is land and machinery as mentioned, which is for an amount of 4 lakh rupees. And the next asset, or rather, if you can see, I've mentioned a slight green line under 9 lakh. That defines, or that segregates the liability side and the asset side for you. So capital comes under the liability category. Hence, the balance of liability side is 9 lakh rupees. It should be equivalent to the total of asset side as well. Under asset, we have one. First is tangible asset, which is amounting to 4 lakh rupees. The next asset will be current assets, that is cash and cash equivalent that we have. So we had issued 50,000 shares for public subscription. For that, we have received cash of 5 lakh. So we'll mention that. So we have mentioned the notes to account, cash and cash equivalent. If you can see under both the green lines, one total is 9 lakh and the other total, that is asset side 4 lakh plus 5 lakh, gives you a total of 9 lakh. So the working year is done. Now it's time to prepare the balance sheet here. So we'll prepare the balance sheet in T format for you to understand in a better way. So share capital total has been mentioned as 9 lakh rupees. That is the shareholders fund. So the heading comes as shareholders fund here basically. Now, the next part will be assets. Under assets, we have tangible, that is non-current assets and current assets. So, non-current assets, we have a part that is land and machinery, 4 lakh rupees has been mentioned. The last part of this will be current assets, that is cash balance. So the total of balance that we have here is 9 lakh rupees on liability side, 9 lakh rupees on asset side, and here we close down the balance sheet. So especially when you're talking about these kind of sums where the illustration, or rather the illustration, talks about issue of shares for consideration other than cash, then in such a situation, this is how you have to prepare things. But now, as it is CPT that you're discussing about, CPT always has details of MCQs. That means you have to be very quick while solving problems. Mind calculation, being mindful about things, being, or rather having a presence of mind with the numbers is really important when you deal with such numbers. And especially this is a very scoring chapter when it comes to common proficiency test. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.